Good afternoon, everybody, and welcome to the first Kinesis webinar. Glad to have you all here, and we've had a great response from everybody. That we've got people here from Telegram and from all over the world. This session will be recorded, so hello to all the people that can only see this on recording. And I'd like to introduce you to Thomas Coughlin, our CEO. Who's going to take you through Kinesis and the KVT, and hopefully address everything you need to know about what we're doing here. So without further ado, I'll pass you over.
What Tom's going to do today is going to tell the story. And what it is how, I mean, if you can't really sum up Kinesis in a few words. It's such a dynamic project. But it's going to start the story of how and why a cryptocurrency based on gold is attempting to solve the store of value and the medium of exchange and the unit of account problems that cryptocurrencies everywhere are wrestling with.
Andy, I mean, maybe while I just sort of get ready here again, because I just got to get set up again. Maybe if you can just give a little bit of an intro on how we met and how you've been involved in Allocated Bullion Exchange, and also how what we've been doing here all together.
Sure, Tom. Yeah, I know. I'm sure you'll get that solved in a minute. Technology, eh?
That's it.
It's a long story. I met Tom must be 7 years ago now, and to me, if you want to count the number of people I trust, they're usually on one hand, and he's certainly well inside that hand. So I consider him a brother. When we met was after probably everyone knows me as a whistleblower. Trying to sort out the problems in the physical markets, the paper markets, and the relationship between the two of them, and working with the likes of Bart Chilton, by the way, and there'll be news on Bart Chilton over the next few days, which will be interesting to people. But after really nothing got done, we realized we had to get together and look at and create or really resolve how the physical market works and how it can basically overrun what is happening in the paper markets. And obviously, as we know, paper markets, you can create limitless amounts of gold and silver, create them out of thin air, and then obviously if you're then a bullion bank, you can control the price. So, long story short, connect all the dots, met Tom, came up with a brilliant idea, the Allocated Bullion Exchange, which was an electronic allocated bullion exchange, essentially the ability to trade physical across the globe and to vault those in jurisdictions that are safe. And I recently listened to a Real Vision interview with Simon Malkovich, and he talked about the value of having physical gold in different jurisdictions should there be a financial crisis. And this is one of the beauties too that I see, one of the spin-offs of Kinesis. When you store your gold and silver in the Kinesis system, you are storing your gold and silver in vaults that are global. We're talking about vaults in the jurisdictions that we consider to be safe, and that many of our clients choose to actually vault in. Now, Tom, are you ready to go?
I'm set and I'm ready to go. Yes, I am. Finally. Thanks everyone for their patience here.
Okay, I'll leave it at that. Thanks.
Okay. So yeah, for everyone new here, I'd like to introduce myself. Obviously, my name is Thomas Coughlin. I'm the CEO of Kinesis Monetary System. I'm also the CEO of Allocated Bullion Exchange. So if you're not familiar with Allocated Bullion Exchange, basically it's a global spot physical exchange for precious metals, gold, silver, and platinum. ABX was founded about in 2011, And it's taken a monumental effort that's involved the entire team traveling around the world to all corners of the world many, many times and meeting market participants from all over the world, from, you know, the average small sort of gold dealer or investor to the very biggest, most powerful central bankers and bullion bankers all around the world. All the major central bankers we've met, and we spent a long time actually in what I call, you know, research and development phase, and basically talking to participants all around the world, taking in that market intelligence and building it all out. We had a few major objectives in mind. One was to bring a fair and secure wholesale bullion exchange and make it highly inclusive and not and pull basically the power of the current incumbent market pricing system away from that sort of handful of powerful players, and basically disperse that power across the world to normal people just like you and I, and basically make the physical precious metals market a fair one. And we're still developing ABX out. We've put together some really, really amazing partnerships. Some of you might have heard about the partnership with Deutsche Börse, and we've got many more as well. And that's still developing, but it's a large institutional project with long time frames. A lot of these big deals take a long time to put together and got a long lead times. Anyway, so how I got into building out ABX was basically through my hedge fund management days, where I was a macro hedge fund manager and trader. I was trading in financial markets. It got very exciting back in the great financial crisis days, the GFC, as we call it in Australia. And I was staying up all night watching the markets in Europe and in the US and watching the massive volatility. And anyway, I wanted to take a long-term position within my hedge fund portfolio into gold and silver. So at the time, I had no real idea about how the market was structured, like the physical market was structured. So I just picked up the phone in Australia, in Brisbane, and called the Perth Mint. That's the only precious metal market participant I knew at the time. And I picked up the phone to the Perth Mint, and I realized the enormous costs involved at the time at that time. There was something at the time, like for what I wanted to buy, it might have been like 10 kilos of gold or something like that. And I figured out there was a buy-sell spread of around 10%. And that just wasn't palatable. It wasn't a viable investment facility or solution for me in what we're doing. So I could not enter a trade if I did not have an efficient way of getting out of the trade. And it was just highly inefficient. I had to sit on hold for about an hour, waiting for someone to, you know, answer the phone, and basically, you know, all the logistics I had to take care of myself, and I had no real idea about it all. So I thought, this is a real hole in the market, and there's a real opportunity here for this problem to be solved. And so that little vision that started back in Brisbane, Australia, of providing a solution to the financial services industry in Australia really became a global vision when, well, there was a lot of interference as we were setting up, and we needed to go global effectively. And I jumped on a plane to Singapore, and 3 days of meetings turned into 3 weeks of meetings, and we were just blown away at the appetite for this. It was really quite extraordinary, and that started the ball rolling in everything that we're doing. And I'm telling you the background story with ABX because it's very, very relevant to the Kinesis system. The core backbone of Kinesis is really powered by ABX, and that's the whole physical side, as well as like the price discovery side as well. So anyway, like that was back in 2011, 2012. We started to put together a core team, and we started to build out a full institutional grade exchange. I mean, what we have with ABX, it competes on latency, and it competes, the technology competes with the likes of, you know, the NYSE or NASDAQ or whatever exchange you look at. I mean, we're going through a very big integration with Deutsche Börse at the moment, and our technology is so cutting edge and like above anything else. Then like their incumbent systems are having like difficulties in actually integrating everything together. So you know, we've actually been taking on more and more of the role there that we were going to do with Deutsche Börse. So anyway, we've always been very, very interested at ABX in like peer-to-peer transfer of value of precious metals. In fact, I remember thinking about it at the very beginning and whether to embark on providing a peer-to-peer system where someone can ultimately transfer value to someone else. And we decided not to go down that path of doing it, just because I didn't see the value proposition at the time as being high enough. And if you do a little bit of market research, you'll see that there are, you know, there is and there were other platforms out there that have attempted to do the same thing in the past, and they've failed. And back then, you know, I looked into, you know, why exactly they'd failed, and I had already been a bit of a monetary student and historian, and I was acutely aware of the principle Gresham's law, which is a monetary, I guess, phenomenon whereby bad money drives out good. Ultimately, when there's money in a system which is perceived by someone or a collective group that is valued higher than another form of money that's in the system, so there's two competing forms of money in the system, then people choose to hoard the more valued currency, and it ultimately gets pulled out of the system because people hoard it and they spend and use it for transactions, the less valued currency. So when it comes to precious metals, if someone makes a decision to choose to exchange their fiat currency, it might be USD, it might be Euro, it might be Japanese yen, for say gold or for silver, then in their mind, they value gold or silver more than what they're exchanging it for, be it fiat currency. So why would they then make the decision to go and spend or use as a transactional currency what they actually just swapped for with the fiat currency? It means that they value gold or silver higher than what they do fiat currency. That means that they think it might go up, which is, you know, what you're seeing, say, for example, in the cryptocurrency markets at the moment. People are wanting cryptocurrencies to go up, so therefore they don't work so well as a transactional currency. Anyway, over the years, we really started to think more and more, ultimately, as the ABX project became more and more mature, and we became bigger and bigger, of also, okay, we were looking at blockchain, seeing how that was developing and how it started to gain more and more traction, and then looked at what the blockchain and cryptocurrency technology could do for us. Now, understanding that ultimately everyone needs to be incentivized within the system for the system to actually work and for the system to become like a self-fulfilling and self-feeding and a system that can build momentum upon itself. We realized, look, we got to build out an incentivizing yield system. And what is most important about that is, in this yield system, is that it actually incentivizes people to use gold and silver as a transactional currency. And this is what we think that we've done, and this is what makes us phenomenally unique and a head and shoulders above anything else I've seen out there. And yeah, I mean, no other system, whether it be in cryptocurrency or anything, or blockchain, has any kind of incentivizing mechanism built in it, whereby it defeats, in my view, it really will go a long way to defeating Gresham's law, because it allows people to be able to hold a currency which they value, right? And to actually use it as a transactional currency without inflation ultimately debasing the asset, and with the expectation of the asset going down, then you use it. And that's how central planners, what they do with fiat currency these days, to keep people spending. Ultimately, just inflate prices, which really means devaluing the currency. So we keep on spending it, because next year our dollars will not be worth as much. So anyway, that's sort of my story, how I got involved in everything and how we end up with Kinesis. And ultimately what happened, just from putting together the Kinesis system, we were able to port over a lot of what we've done with ABX. I mean, ABX is the whole backbone of what we've done. It's got all the physical mechanics in there that interface into market participants that are market makers and liquidity providers. It's really like a well-established and unblemished organization and system that we've put together, and that all ports over to the Kinesis system. So, I mean, what we've developed at Kinesis, let me flick through this now. I mean, the vision of Kinesis is something that it's really quite profound. Actually, I'll bring over this, which sort of delves into, I guess, our vision, mission, our pillars, our objectives, and our values. And this is really what our entire system is built around, and this is our future, and this is our legacy as well. I mean, what we want to do with Kinesis is actually make a change on the world, and particularly a change on money and the way that we go about economics and commerce. So our vision is an unrelenting one for positive global change and pushing the boundaries of what is achievable with money, economics, and commerce for the unified advancement and betterment of all. And see, what we've developed with this system, and what we're continuing to develop, it's a system that protects people's liberties, individually, also collectively. And not only that, it's a system that rewards people and their efforts immediately for their individual performance and effort, but also it promotes collective teamwork as well. Ultimately, if it's not something that's exclusive, you're not going to get exclusive benefit out of this system, unless of course you participate in it at the very beginning, which is, I'll get into that later. But once we're all established, there's no exclusivity. Anyone can participate ultimately, and anyone and everyone benefits from more people participating, more people performing within the system. So say, for example, you're in the system and you might be creating currency, minting currency, bringing it in. You might be using the currency as a payment currency, as a savings currency, whatever you might be doing. And then, but also you'll benefit by referring friends in, and then they will benefit and you will benefit if they refer friends in or they refer businesses in. And people can use what our accounts in the system as business accounts, as private personal accounts, and the system really just builds upon itself, and this is what it's designed to do. And that really, what I just outlined, that's really our mission. And I mean, I like to hammer around our three pillars: secure, efficient, and rewarding. Ultimately, what we're building is something that is secure, The security has really, it's been built out by ABX. We've got a quality assurance framework that looks after all the physical handling of the precious metals behind the scene. It's efficient, highly efficient. Everything's highly efficient from, this facilitated through the blockchain. We can efficiently transfer value peer-to-peer, and it's rewarding, as I was discussing about before as well. So let me just quickly delve into ultimately what our currencies actually are. So they are one-for-one currencies. And let me just find this presentation again. Where are you gone? There we go. I'm getting better at this now. Okay. They're one-for-one. Sorry, rewind. Our currencies, what they are, is a one-for-one direct allocation of precious metals, gold or silver. So we don't like to use the word backing because, for example, an ETF, so an exchange traded fund, it is backed by precious metals, but you don't know exactly how it's backed and how many multiple layers are there between, what you are actually buying, a unit or a company share in an ETF, and how many layers and how many indemnifying sort of financial twisted loops are there before you actually get to the precious metals. So, but it's difficult to explain it. Really what we are is a fractional, highly divisible ownership of physical gold and silver. So for KAU, which is our gold currency, you're buying, if you buy 1 KAU, it's 1 gram of gold. If you buy KAG, it's 10 grams of silver. So that's effectively what it is. And then by putting it on the blockchain and by making it divisible, then we're remonetizing precious metals. We're remonetizing gold and silver. So, and this delves into what we really need to do to remonetize gold and silver. And thankfully for blockchain and cryptocurrency technology and the AVX, we're able to do this. So what makes a successful currency? So first it needs to be an efficient medium of exchange and an effective store of value. So efficient medium of exchange. Well, that's what the blockchain has delivered to us, and also cryptocurrency technology. So with that, we can peer-to-peer transfer in a highly efficient way, which is transparent. It's a trustless system where someone cannot defeat it. You can transact with someone anonymously without actually knowing who they are, and you know that there will be good settlement of the trade, because that's the way that the algorithm is built out in the blockchain. So, and there's no defeating the system. So that's perfect. But that's within a blockchain cryptocurrency environment. What also you need to do, although they are our incumbent fiat and fractional banking systems are very problematic, highly inefficient, and you can go on and on and on, manipulated, controlled, etc. We still, as we build this out, we need the interfacing into them. So we can onboard and offboard fiat currency into the Kinesis system, blockchain system, or monetary system, but also fit in with the way that commerce works around the world, which is you've got merchants basically accepting their native fiat currency wherever they are. So in this sense, this is why we've built out all the rails to be able to bring money in and out of our monetary system, and also use our debit card. We're going to have Visa cards and MasterCards that will be domestically issued in a lot of different countries around the world. That will still be announced, and it's going to be high, and it's all going to be interfaced together. We're going to have one anonymous. Actually, I'll delve into the technology a little bit more later. So the next thing that makes money successful is effective store of value. And what better store of value do you get than gold? It's the most effective store of value that the world has ever seen. Independently valued by civilizations all around the world, and has effectively kept its purchasing power throughout time. So, you know, one piece of gold, you know, bought the same amount of loaves of bread throughout all of time, or, you know, there's lots of different analogies and comparisons that can be made. Whereas if you compare it to fiat currency, for example, then basically every single fiat currency has failed over time. So it's not a matter of if, it's a matter of when. And if you're holding gold, yeah, you might have to go through some ups and downs along the way, but ultimately, if you're holding it as a currency, then you will win, because it's history has shown us. That's basically, and history does not tell lies. And there's just basically no arguing that. So we think we've combined things together on the most effective store of value and the most efficient medium of exchange. But then on top of that, we've added a whole new dimension. And that is this incentivizing reward system that has been basically facilitated and allowed this innovation to come to fruition, to the forefront, through technology. And that's this incentivizing yield system that I'm incentivized to actually even create money and then use it. That's our minter yield. So you can go into our primary market called KCX, and I'll delve into this. And you can create your own currency, and then you use it and you're rewarded. Or you bring someone into our system, or a business into our system, and they trade, and they, you know, economic activity is generated and transaction fees, and it's shared with everyone and shared with you as well. So everyone is incentivized, and this is a whole new element that we have introduced at Kinesis, and this is what makes us so special, along with many other things. But this yield system, it's brought a new dimension to money. So we're all super excited about it, and it's going to be very, very interesting to see this in practice. So, I mean, I've sort of quickly gone over some problems that we're solving, but ultimately, and we lost a bit of time at the beginning, so I'll go as fast as possible. Ultimately, you know, in the cryptocurrency space, I mean, the volatility just prevents cryptocurrencies from actually serving what money is supposed to serve, which is the commerce of the world. Let's say, for example, I'm selling a certain product. My profit margins on that product might only be 10 or 20%. They might only be 5%. How am I supposed to accept cryptocurrency and actually hold it on my balance sheet with the volatility that's in it? I mean, I'd be taking a very big gamble ultimately. And in business, you shouldn't be gambling. So the volatility prevents it from actually being, for cryptocurrency to be considered real money. They're more speculative products or speculative vehicles rather than a store of value. Yes, what blockchain has done through the pioneers being Bitcoin or Ethereum, blockchain has really paved the way forward for other players to come to the forefront and to really bring that next sort of wave of innovation into the new age monetary space, into Kinesis. So, and in the precious metals industry as well, I mean, it's always been a big problem, and you'll listen to the likes of, you know, Warren Buffett or George Soros or whomever, the big and value investors out there. And, you know, in the case of Warren Buffett, you know, or Greenspan, where you know, gold's an archaic relic. And they largely criticize it because it has no yield. Yeah, fiat currency has a yield because it's debt associated with it. You know what? We've brought a yield to precious metals, and we've still maintained what is true and what it truly represents, which is a debt-free, secure, safe asset. So we've added this yield factor to it, which is not generated through debt, but generated through true economic activity. So we share in our system's economic activity, and we share it fairly with everyone, and it cannot be defeated. This is encoded into the blockchain, encoded into the system. So everyone shares according to the rules of the system fairly with each other, and then there's a yield associated with it. So if we look at our different major target markets, whether it be the cryptocurrency sphere, whether it be the precious metal markets, or payments or whatever, we're solving a lot of problems, and we're adding a lot of value. So suddenly in the precious metals markets, we've added this yield factor, whereby people can benefit from active participation, but also passive participation. So, I mean, what do you think that's really going to do? I mean, suddenly you introduce a yield to a non-yielding asset, it changes the whole pricing and value of that asset. So, I mean, one day a stone or a piece of metal doesn't actually make something, it doesn't have a yield, it doesn't derive revenue, and the next day it does. It's going to have some very, very interesting consequences on the actual value of gold. Firstly, I contend that a lot of outside capital will be sucked into the Kinesis system because we're just the more valuable solution. At the end of the day, we offer the ability for people to change ultimately a piece of metal which does not produce any kind of yield, any kind of income, into a piece of metal that does, and potentially a lot of revenue. So for that's something quite exciting. Not only, it costs a lot of money to hold gold. You know, you might need to store it in a safety deposit box or in a vault, or you might need to move it around, you need to pay. There's a lot of different fees associated with it. In the payment space, we solve a lot of problems. So ultimately, firstly, it's a real pain to move money around the world, internationally, cross-border. There's slow transaction times. I mean, it can take, you know, up to 5 days to move money to different parts of the world through the banking system. Of course, it's under the full purview of the central planners that can, you know, push the no button at any time, or freeze your account at any time, or do whatever they want to do at any time. Through our system, it's virtually instantaneous. So, and I'll get further into sort of the high-level technology side in a little bit, but we're offering through our fork of Stellar. We've basically evolved Stellar to our needs and to what we think is actually even a superior solution. We offer 3 to 5 second transaction times, and it will deal with, our system will handle for each and every product thousands and thousands of transactions a second. It's our system is really set up for it to be like a global monetary system. Yeah, I mentioned about the debit card, and ultimately this will be interfaced into integrated solution, which has a fiat currency wallet and ultimately a cryptocurrency wallet as well. And you can effectively go and spend your cryptocurrencies on your debit card. Now, there's a few mechanics and a few things going on behind the scenes. For example, you know, as part of our system, we're developing a full exchange. If I get to it at some point, here we go. So it's a blockchain exchange. It's a Kinesis blockchain exchange. And this will do ultimately the automatic exchanges between the different fiat currencies and also different cryptocurrencies. But say, for example, you use your debit card and the native currency is euro, but you're holding KAU, then ultimately there'll be a behind the scenes exchange for KAU to euro, but it'll be done on our exchange. So to get everything we needed to done, we just decided to build everything ourselves ultimately, and it's going very well. We're ahead of time on all of our projects. I mean, just looking at this right now. Actually, I'll rewind and I'll delve into this a little bit later. So I explained how, you know, we've evolved Stellar, and we've evolved it to take into account something that no other cryptocurrency blockchain or no other blockchain out there actually does, and that's calculate fees on a per value of transaction method. And this is important because, okay, in the case of say like Bitcoin, Ethereum, the transaction fees are based on like the mining of it, and that's how they're determined. But it doesn't matter whether it's $1 billion transaction or a $1 transaction, the fee is going to be the same. But what that actually does, it's not a one-size-fits-all solution. So, I mean, if I'm incurring a $10 fee on a transaction, or even a $1 fee on a transaction, I can't go buy a coffee, for example. It's not going to work. So in that sense, I can't actually use that blockchain as a real monetary system because the costs associated with that are too expensive. In addition to that, you know, the Bitcoin, Ethereum sort of blockchain networks of the world, they use so much energy in actually mining these the currencies, all this computing power around the world to actually mine it. To me, it doesn't make sense. What does make sense is the most efficient method possible, and that's what we've done. And that's the best blockchain to base our system off was Stellar. It's the most efficient from all different aspects. It's got high transactional throughput and efficiency and load. And then all we needed to do was actually evolve the Stellar network to calculate the fees, which we use, which we share within our system, and use to incentivize all the different market participants in our system. We basically embedded that into the Stellar blockchain. And these are our different yields. So the minter yield, the depositor's yield, the holder yield, and the accruer yield. So let me just see here. Okay, no, I'll go back up. Okay, the minter yield. Ultimately, minters are, as I was saying, they're people who come into, and I'll go down here. They come into the Kinesis currency exchange at the top. There you go, Kinesis Minter. And they bring fiat currency or gold will be forthcoming with the different ways to bring value into the system. At least initially it'll be USD, and there'll be an exchange mechanism between like the AVX system and the Kinesis currency exchange to do basically a physical for digital swap. So and we'll have a lot of information and collaterals that are forthcoming. We're about to release a whole suite of them actually currently. This is This is like a white paper summary. We'll be releasing a white paper, brochures, and how, you know, all the different types of participants are rewarded and receive value within our system. So the minter comes into our system. They create currency in the Kinesis Currency Exchange. All they need to do is buy, and then immediately upon buying, it's emitted into their wallet within the blockchain. So you'll see it pop up in your wallet in the blockchain. And then to start earning a yield on the value of whatever you created, you need to send, spend, or sell it, ultimately. If you sell it, you have to sell on the offer side of the market, which all this will be outlined. Ultimately, you have to use it as a currency to start getting that yield. If you're a depositor, that's someone who doesn't create the currency. That's someone who just, say, downloads their application on their phone. They just want it quick and simple. You'll receive a yield in the same way as the minter. So this is the depositor. So there you go. You can see the different flow. By just downloading and then by doing an initial deposit into your wallet. And whatever that initial deposit size is, once you sell it, then you'll receive a yield on that currency forever as it passes through the network. And this is also how the minter works. I didn't finish there, but once you sell it, you receive a yield on whatever you created and sold forever. So if you're a minter, you can just keep on creating money. If you're a business, for example, and you want to pay your employees, let's say in 50% of Kinesis currency, then ultimately I create the currency, I pay for the employees 50% of their wage in currency, and they then obviously go out and spend it or sell it or do whatever they do with it, and it starts going through the system. You start to earn on all the currency that you created. You can do it as an individual investor, just actively doing it just to make a bit of extra money, ultimately. Might be a miner who's bringing gold into the system and wants to receive a whole new revenue line. Wherever I look, there's value. As a holder, right? These guys are the lazy guys. But ultimately, we needed to create this holders yield, because by creating a passive income, then we make ourselves comparable to any other passive or any other asset that has a passive yield. So this, you receive a yield just for holding the currency. While it's just sitting there doing nothing, you receive a yield. All it is a sharing of the transaction fees within the system. You're still incentivized while you're doing this to go out and recruit people, bring them in and do whatever. You can still be minting at the same time. But when you're holding in the system, holding our Kinesis coin, a Kinesis currency, you receive a yield. Okay. So yeah, we've got our different components. It's really a structure that's made up of our primary exchange that we call the Kinesis Currency Exchange, where the coins are brought to life, where the coins are minted. Once they're minted in the primary market, they're emitted down into ultimately we call it the KBN, Kinesis Blockchain Network. And within the Kinesis Blockchain Network, we have the Kinesis Financial Network. This has undergone a name change recently. It was called the Kinesis Digital Bank, but just to not have regulators misunderstanding exactly what we're doing, we decided to change the name, because we're not a banking institution, ultimately. So we call it the Kinesis Financial Network, and that's where ultimately the wallets sit with both in the fiat wallet and our unified solution, which also brings in the cryptocurrency side as well. Our Kinesis Blockchain Exchange. So we're creating our own exchange. It's under development right now. And the Kinesis Commercial Center. This is where you'll have merchants all linked into the system, benefiting from all the users in the system, by being interfaced into our system, but the users in our system can also utilize basically a direct interface into these merchants. So it's a closed list system where, like, it's whereby you can create the currency, use the currency as a payment currency, and also interface directly into merchants. So here's a better example of everything that's going on. And this is, everything that's feeding into what we've done as well. So over here, we've got ABX, obviously, that's supporting everything, and that feeds into the entire network. Behind ABX is a very big partnership with basically Deutsche Börse Group, and everything that ABX has built out. We've built out a lot over the years. That's sort of listed there with the wallet. We've got a mobile banking partner behind us called Unified Signal. That's their mobile banking has. This is really great partnership because we utilize these guys and all of their fiat and banking facilities all around the world. But then also what we bring in is a highly liquid marketplace with all these market makers and liquidity providers. We've got a lot of them. Actually, that's just a few listed there. We've even got associations with like mines out of Africa, etc. And I'm running out of time, so I'll move on quickly. And look, this is what I really wanted to present to you today. So, from everyone out there, and this is just an introductory call, and I look forward to delving deeper into all the different aspects of what we're doing in subsequent calls, and we're going to keep this going. I don't know how regularly, should be at least once a week, and we're starting, this sort of marks the start of our big PR campaign. But what I want to do today, and what's most important, is for me to communicate to you about the importance of, if you like our system, then the best way to support it at this point in time is to actually get involved with our KVT, our Kinesis Velocity Token ITO, so initial token offering, even if it's just one token. Because what that does is, for us, it's really important. We want as many people as possible to become invested in the success of our system. And this is the best way we found that we could do it. If you're invested in the success of our system, then you are incentivized to go out and tell your friends and family or your contacts that you have to get involved. And also you're incentivized to utilize our solution as an everyday solution. You won't be disappointed with the user experience. So let me just delve into what the Kinesis Velocity Token is. It's what it does, it offers a proportional share spread across all KVT holders of 20% of all transaction fees within the Kinesis Monetary system. So we take 20% of all transaction fees and also any other fees that are associated with the commercial center, and basically we just give them to we give them to the KVT holders in proportion with how many KVTs you hold. And this is the greatest form to actually benefit from the system. It's effectively, a one-time investment, or you can make subsequent purchases later, but there's incentives to obviously get involved earlier. It's a utility token. It's on the Ethereum ERC, Ethereum network. It's the ERC20 utility token. And also by getting involved in this now and before the Kinesis monetary system launches, you'll reserve your right to the pre-ICO benefits of the currency system. So you'll lock in basically high yields associated with the monetary system for your initial participation. Here's a bit of a time frame. So we opened it in a very small, selective way back in February 14. And it was like Andy Maguire and I just did a few interviews and spoke to some of our network, and boom, we weren't prepared for what came in. Basically, we opened the floodgates and avalanche came in, and then we had to quickly scramble to get everything ready on our side. We've opened offices, different parts of the world. We've opened now a London office that's growing so rapidly. We're opening a Barcelona office at the moment as well, and there's other offices that are opening up in different parts of the world as well. We've got one in Hong Kong, and we've got our big one in Australia, obviously, but there's a few other opening up as well. And so we're now into early June, and really the sales have been so tremendous that it stretched our resources internally, and also we're scrambling to obviously build everything out. So this is ultimately where we are, and sales are going phenomenally well, and we'll keep you very updated on and on all our progress along the way. Let me delve into quickly, before I hand over to go into Q&A time, ultimately the economics behind the KVTs. So this is what is on offer ultimately. So one big benefit that Kinesis has over any other cryptocurrency platform or blockchain platform out there is the fact that, hey, we're not relying on money to come into this new emerging market, right? Because that's what ultimately cryptocurrencies have done. They've sourced sort of hot money from crypto kids and new, adventurous people who want to support a revolution against the banks and a revolution against the central planners out there. And that's all very well and good, but that's sort of money supporting this new market that's emerged. We're attracting money from that market and that demographic as well. But what is so amazing about what we're doing is, I've already illustrated to you that we provide enormous value to the precious metals community, the precious metals industry. But because of what we're doing, we also target the capital within that market. So, and this is ultimately a $7 to $8 trillion market. It's a massive, massive market that's been around forever. And so we're targeting the capital which is in the precious metals market, gold, silver market, and also in the cryptocurrency markets. And not only that, because of the yield system, because of the way the yield system is, and because we've created that passive yield, we really target capital from everywhere. Because if our yield is high and it's passive, then ultimately we become a comparable investment asset to everything else: bank deposits, shares on a stock market that pay dividends, property. If we can show a comparable yield that's even more attractive, then we become we access all different sources of capital all around the world. This is the genius behind this, right? We can really suck in a tremendous amount of capital, and people are rewarded for it. All they need to do is be a little bit active. They don't even need to be a little bit active. They can be passive and still get good yields. So what the Kinesis Velocity Token does is it takes it takes 20% of the fees from the system and disperses it. But if you start to look at the economics of it all, and this is the system. It's not a company. It's not a person that's amazing at managing a company. This is a system that can't be broken ultimately. And if you like ultimately how all these mechanics work, then you should get involved in this, because you'll benefit greatly. So we've taken, let me see if it's here or not. Basically, yeah, here it is. We've taken the gold market, and that's all we've taken. So here you go. We've looked at market infiltration of, here's the different investment or target markets that ultimately we touch, whether it be physical gold, silver, paper silver, cryptocurrency market, fiat currency market, investment market. As I said, because we got that yield, we target all of that capital. But we've just said, look, let's forget about everything else because those numbers will look too ridiculous ultimately. Let's just look at the gold market, which is only like, I don't know, an $8 trillion market or something. There you go. It's almost 8 trillion. And we'll just look at a modest infiltration of that market, which is fair enough because we're providing phenomenal value by offering a yield where gold doesn't offer a yield ultimately. So we're actually bringing greater value to gold as an asset class. So we've taken a modest infiltration of the gold market starting at 0.1% and over 5 years going up to 3%. As you can see, the gold market is massive. And by doing that, and then by applying a velocity rate of 30% into the system. So if we're successful in our currencies being utilized as transactional currencies, then that should be okay because, you know, you spend money here, then that person spends money, and the same, say, €20 or $20 that you spend that day, it gets passed on from one person to the next over and over and over and over. And that's how velocity rates and transaction fees get so high. The other beauty of this is, unlike, say, ABX, the exchange, which is only open, I don't know, for 280 days per year because of the weekends, we're trading 365 days a year because the blockchain doesn't stop and we don't stop. The system will not stop. So the volumes are very, very high. And 20% go to KVT holders. And so, I mean, I'm a finance guy. I come out of the finance industry. So I look at things like discounted cash flow analysis and net present value calculations. So what we've done here, it's called a net present value calculation. We've basically taken 5 years of cash flow that's come from the KVT. We've then put it into value terms as of today from those 5 years. That's just if you hold it for 5 years and no more. And it comes out with a valuation. I know it looks ridiculous, but your $1,000 investment into KVTs comes out at a $256,636 valuation. Look, that might not happen, but I'm just saying under this model with those assumptions, you might think those assumptions are unrealistic. And look, we can't make any promises around the assumptions, and I'd suggest that you do your own research as well. But that is, I want to use this as an illustration to show how powerful and potentially valuable this model is, and this system is. And ultimately, the people that are going to be in it from the beginning are going to benefit from it. And I mean, at this point as well, I think it's every day, you know, like internally, we share all the different articles that come out about blockchain and cryptocurrencies. Well, not all of them, but the big ones. And you see more and more governments accepting it, banks accepting it even, large institutions accepted it. I mean, I hope that people start to, I mean, anyone who has doubts about whether, you know, like blockchain is like the next sort of phase of the Industrial Revolution, I mean, they better open their eyes and understand that this is underway and there's nothing stopping it now. And just like, say, the internet and the big, you know, the giant, most powerful companies in the world at the moment are the tech companies, which really benefited from the tech boom. This is the next phase. And so the pioneers and the people at the beginning of this phase, of this blockchain phase, are They're going to be the big controlling, powerful titans of the world. So it's really, I'm really excited about everything that we're doing. I want as many of my colleagues, friends, and family to be involved in this as possible and benefit from it. This is something that I feel, and almost everyone in my team feels, as though their entire professional career has led them to like this moment in time, whereby we are bringing something that is so profound and grand and as making such monumental change on the world for the greater benefit of everyone. That it's just something amazing. I feel as though everything I've learned has sort of brought me to this point to really drive this project home, from all the macroeconomic and monetary study I've done, from my understanding of markets, and from my understanding of market architecture and the engineering behind it all, to all the different market dynamics, and then bringing everything together like this. I mean, the ABX and Kinesis team is in the most optimal position to do this, and it's very, very exciting. So anyway, this is just some timeframes associated with the KVT. We're still at a 2.5% discount, but that's going to be shortly closing at the end of this month. And basically, you got to get involved sooner rather than later. And that's really about it. So what I'm going to quickly do is address some questions that have been asked along the way, because we have run out of time. I would have been almost spot on if I didn't have the technical difficulty of the sticky note that I owe my camera. So there's a question here: who controls the asset management of gold and silver behind the system and guarantees and verifies the stockpile? Ultimately, so it falls within the ABX quality assurance framework and the ABX system. And this is like our quality assurance framework, as I said earlier, it details all the different mechanics and rules of the system. And it's a multi-layered audit and verification system. We have third-party vaulting providers that we utilize. These are like the majors, like Brinks, Vimat, Loomis, as well as we have some select, like we call them premium facilities, that are like independent vaults, which provide like a higher sort of solution. And we've got one that we work with in Liechtenstein in particular, and there's a few others that we are putting together deals with. And I mean, we just provide phenomenal value to vaults, but I won't get into that now. So yeah, we've got independent auditors and like quality verifiers. So for example, we have a well-known verification and audit company in the commodity space called Inspectorate, and they come in and they weigh the bars, they look at the hallmarks, they take match everything off against our records and our system's records, make sure everything is what it is. And then on top of that as well, we have an accounting audit firm audit and verify all the bars and all the systems along the way as well. If you want to know more details, then ultimately you can delve into ABX's quality assurance framework, which we will have like a resources section on our website and a portal where all this will be housed. So another question: if you have a huge subscription, how do you ensure that every token is backed 100% by gold or silver? So let me just say this now. There is never any scenario where someone where there is not gold in the system or silver in the system that backs the currency in the system, because the gold has to be there in the system before the currency is created. So what I mean by that, we have a primary market. The sellers in the primary market need to have the gold in the system before they can sell anything. So the gold is in the system, then offers are put into the market that minters, like the buyers of the currency, buy. And then it goes into the blockchain. The gold or the silver is there in the system first. There's never a scenario where you buy and then gold is to be delivered in. No, that doesn't exist. It is there. If you're buying something, you are buying gold or silver already in the vault, and nothing can defeat that. Where are you going to buy gold or silver to back Kinesis? So this goes into, it's not us acting as independent parties here that are like buying gold and silver, no. We have utilized a market structure that is comparable to an exchange. Well, it is utilizing the ABX exchange technology and systems. That's in the primary market where the coins are created. So the sellers in this market are actually liquidity providers. They're not us. So it could be, you know, like a big bullion dealer in Hong Kong, or it could be a big bullion dealer in Singapore, or in anywhere in the world, ultimately. And when you buy, you're actually, you're buying the liquidity that they're offering. So, but the gold is already in the market. It's already sitting in the vault, and it's there. And let me just say this right now as well. We are going to have the really, really great prices and very, very tight spreads. We will have the tightest spreads for physical metal anywhere in the world. And something else, you know what? We not only provide a yield, we will have no storage fees as well. Why can we offer no storage fees and a yield? Because ultimately, our system is a full circle system where, I mean, we are able to cover that expense ultimately by the share of the transaction fees that we get. So we're able to cover that. I know that we're running out of time, ladies and gents. So what else is here? Could UK local councils use Kinesis? This would enable them to earn a yield, which could then be used to provide increased essential services to the people they serve. Yes, they could. 100%. Any form of government could utilize Kinesis. In fact, I think in a utopian, idealistic world, we would all be using it, because in that sense, a government could offer this form of money and actually derive what they needed from the transaction fees to, you know, look after utilities, look after the services that they need to provide to everyone, and ultimately not have to tax people, income taxes, etc. But anyway, I'm being told by my team that I need to wrap it up. So thank you very much for everyone's time today. I know that you've tuned in from all around the world. Where we'll keep you updated on the next webinar. I'm looking forward to introducing to you the team behind the scenes that's making all this happen for everyone. And yeah, have a great day, everyone. I look forward to talking again. Thank you very much.